Welcome back to the Krown Crypto channel. It is a very glorious day today as we wake up for it, or I wake up for a little bit of a Saturday bloodbath. And I do want to, I was planning on having a grand old intro today, but my voice is actually a little bit crushed from yesterday's antics. But it was maybe a day early perhaps. So we have plenty to talk about today, obviously with a higher term time frame picture. I really wanted to save this content for tomorrow's video. But right now, seeing as we are getting this move, it seems like it's a little more relevant for the current time being. So with that in mind, I do want to wish you the best and the happiest, and let's get into it right now. Starting off with Krown application, which of course can be found at app.krown.net. And what do we see? We see Fear and Green Index out of 31. Now, of course, this will update as we kind of work our way through the next day. I imagine it's going to be in the very, very, very fearful zone, as you would expect after a nice little, well, I guess now it's almost a $30,000 dump from $69,000 highs all the way down to about $41,000, $42,000 lows thus far. Anyways, do we have any on the winners list today? Oh yeah, we do. They're stable coins and they're up 8%. Not bad right there. Jesus Christ, man. Anyways, all jokes aside, let's go into the market data tab over here. I want to focus on a couple things right now, as we do see the global funding rate again at parity. Now, I do expect this to go into the negative rates here, but this is going to take some time before we do see any sort of mean reversion between funding rates, financing, and of course price action as well. You expect it to go negative when, well, essentially shorts are being rewarded and not even really tested throughout this whole rigmarole here. Global open interest, as you can see right here, did take a little bit of a leg down from our next recording, but this data is actually from basically the day prior. So if you do want to look at what this move has done thus far, we can go over here and we can get a more updated view for the short term. And you can see that it's shaved off a significant amount, actually, all the way back down to levels that we haven't seen basically since Bitcoin was, well, actually, you know, more or less right around kind of the same sort of price levels in the low $40,000 territory. So that is of significant interest right there. Anyways, with that in mind, let's go back into this tab over here and we can go look at the global leverage ratio. I really want to see this come down significantly when we get our new tick tomorrow. So this is, again, going to be a little bit of late information right now, but this is going to be very important to check back in on tomorrow. And then, of course, the global exchange's net flows. We identified over the past 48 hours, big exchange net flows in, the biggest that we've seen basically since our last little Dumbola party, actually way back in August, actually, before that major move down from about $53,000 to $40,000 base. So we are getting something relatively similar right here, and that was another sort of concerning factor, you might say, that we were looking at over the past few days. So let's waste no more time. Let's get into the price action charts right now, and let's talk about essentially what we were speaking about throughout the past couple weeks here, ever since we got the closure below 63,500. Now, yes, indeed, I will own up to it 100%. I was certainly looking for a bounce, a little bit more of a bounce than what we got at about the $54,000 level. That did not happen, and at the end of the day, can't be perfect, of course, but this was a general idea right here based off of several things, namely the bearish divergence that we did see multiple drives of on weekly RSI, also now on the biweekly RSI as well, of course, and that did have targets down to the 21 exponential average right here on the biweekly, and the weekly, obviously 55 when you do see that many drives. Now, I put in these LARP lines, this must have been 2 to 3 weeks ago now, so are they working out? Look, price action could take a million goddamn routes, of course, but at the end of the day, this would have been the more bullish look on this one for the macro picture. And I'm going to present some things here that are actually at least kind of in line with what I am looking for long term if you do want a bit of hopium. And I do think that there's good reasons to have this, but I want to be very deliberately clear right now. If you are picking bottoms, your fingers are going to get dirty and you're probably going to lose your knife or your hands to some knife action. But I would say that even if this is the low right here, which I think that there's good reasons to believe that Bitcoin extremely likely puts in big rallies from this region, it's also very likely to test around its current lows here too, and this is not going to happen all in one day. This is going to take some time, and time is good as you do kind of resolve the market. But as it stands right now, you know, this is the culmination of the same signals that we were looking at for the past few weeks here, again, based off of the break below 63,500, which did initiate major drives of bearish divergence on higher term timeframes. And then also on our momentum oscillators over here, we've been seeing weekly Stokes just nosediving basically, for the last 3 weeks or so. So those two things in confluence with each other, rather powerful. Also, we did see, a bit of a shooting star dildo right here with fall through the next week. So all of these come into culmination right now, and this is kind of what we've been preparing for, and did hit the 618 Fibonacci retracement right here, which is a bullish retracement actually. just to be clear, from the overall macro range, here. So I'm going from 30,000 low to about $69,000 high or so. And yeah, the 618 is kind of where currently Bitcoin is resting. Again, you can get wicks below all the way down to the 55, completely fine. But as long as we do not close below, especially that last higher low that we did see on the weekly, I still do look at this as a macro uptrend. It's just likely to take some time, and we probably resolve it somewhere when you're about 70 to 75% full. That is when they are statistically more likely to break out, or break down as well. I mean, while this would be an ascending triangle, if is going to work out in the bullish view, well, it would still, it would just have a higher probability breakout to the upside. I believe it's in the low 70%. So of course it can still break down as well, but that would be initiated, and this would be the invalidation for the long-term BULAs here, as we've been saying for a long time now, below the last higher low on the weekly, which would be a weekly closure below $43,000, as Elsa destroys the kitchen for right now. Anyways, let's go over here now, and I want to talk about something that I think is a little more interesting, especially kind of adding up the whole tickers here of, confluence for potentially a major macro low, again, with the overall understanding that if this is going to be macro low, extremely unlikely it's just going to V bottom out of here like today. Again, I think if we're going to test into the mid 40s or maybe even low 40s a few more times before this is all said and done. Of course, it is a weekend as well, so we want to see this also on CME. Okay, so let's go on over here. And I want to bring you to this chart. And what I'm going to do now is I am going to get rid of a lot of things because we don't need them for the time being, actually. So get rid of this, and okay, let's see where we're at. Okay, yeah, we do want that one. Nope, we want that one. We don't want that one, and we want this one. Okay, beautiful. So a lot of people are, maybe, I don't know if a lot of people are looking at this, but whatever. I do think that there is good reason if you're going to be looking at the old fractals, which yes, price action is fractal. The problem is that a lot of the time people use fractals to kind of justify terrible trades because it's very difficult to invalidate them in a more tangible sense, as there's always, it just always feels like, oh, well, just a little bit lower, keep on moving that stop loss, right? But more importantly with this, we do see some good points of confluence between these two cycles right here, that being the 2013 double bubble, kind of what we're looking at right on over here as well. So first and foremost, we did identify, this was like a month or two ago. Actually, no, going back to September is when I started speaking about this, but basically, Bitcoin actually on all of these macro cycles loves to play in the mid-cycle consolidation between the 1.272 as a base and the 1.618 as a ceiling. And this is actually also consistent in the more recent one as well in 2018, which I can just briefly show right here, as I suppose it is relevant. Nope, not that one, this one right here. Again, what do you see? 1.272 at the base in your mid-cycle dumbola. And then if I put on the 618, it would have been right there. Well, we can just briefly do it right now as well, just so that you can see very easily. Okay, 1.618, boom. And there you go. Yes, getting the high side of that consolidation. Anyways, I want to turn that off for right now as we do go into our more recent one. Again, 1.272, your base at about $30,000 and the ceiling at about the 1.618. Beautiful. Okay, great symmetry between these two. But in this, if you are looking at this as a fractal, and again, a little bit of hoping right here, you will notice that right before the rally really started to get going to new all-time highs, and when I mean that, Bitcoin was already kind of testing around its prior all-time highs right here. It did get a very swift and nasty dump off right there. So let's actually go down and look at this, because it doesn't look like much on log scale, but if we go down and measure it, this was about a 25.5% dumpola right there, quite significant, right? And you will notice that this is also at the 1.414 in the middle of the 618 and the 1.272. Interesting, right? Well, let's go to our current version of this, and what do you know? Where did the dumpola come down to? The 1.414 actually. Very, very interesting right there. So I do think that is of particular interest, and of course, if we were to take a shaving off a price action from closing high to where we're at right now, about 27.72%. Of course, we don't have the weekly closure just yet, but what I'd also say is another point of interest is the yellow zone of the log curve zones chart. So as long as Bitcoin does hold in there, and yes, there is a degree of error with this, of course, not gonna be absolutely perfect. Bitcoin is still within the context of a long-term mid-cycle consolidation. Yes, you can get wicks below, that's fine. Just don't want to see it close realistically below or open and close below. That would be rather concerning, obviously. So as it stands right now, Bitcoin actually does still hold that region. And if we go over here, another thing that we've been speaking about quite frequently here is, let's go to this long-term chart. Let's take all these off, is this. So let's go back to our 2017-2018 cycle. And throughout the whole cycle, Bitcoin did play out many, downside moves, although they were all in essence a weekly higher low. So this is really, really important when understanding trend. But all of these moves were to the tune of, well, in this case, about 25.5% from the top to the bottom. This one over here, about 25% from closing to closing. This one over here, about 32%. This one over here, about 28%. Very similar. This one over here from close to close, about 34.5. This one over here, about 31.5% right there. And then this one right here, another 27%. And you'll notice that, well, that's very much in line with what we've seen thus far here. So while these numbers are very, very big, understand that percentage-wise and if we just got rid of this damn price scale on the right-hand side over here, you'd notice that there is a lot of similarity between these, between these two setups. So again, from where we're at right now to where we went to, about 27.5%. If we do use wicks in this case, that would be about a 40% move. So definitely would be on the higher end, which we have seen wick moves for about 40% in those prior pullbacks. Although I wanted to really focus it down on the closures there, because that's, it's a little bit more tangible. Anyways, we are 11 minutes into this video, and I don't want to make this one too long for right now, and I just really want to focus this one on the long term. But another thing that I just want to point out before we're done here is this. So one of the big things that I was kind of harping on this past week was the essence of the whole macro structure here as a consolidation. We already spoke about the volume signature earlier, or at least I think we did. If we haven't, well, basically what do we see? We see a declining volume signature from left to right. Oh yeah, okay, we do have it right there. Which, what does that imply? It implies consolidation. Consolidation, of course. So if this is consolidation, we also expect a contraction phase within the context of volatility. And we've been seeing that ever since, the highs in earlier 2021. So, I still do look at this as one macro structure of consolidation. We're just dealing with humongous numbers right here. So if you are bullish, if you're still bullish on the long term, I do think that there's still good reasons to be. I think it's going to take a long time, obviously. Again, you typically do break these sort of formations when you're about 70 to 75% full, which would be somewhere around here, actually, in January, mid to late January, in fact. So, Santa rally, all jokes aside, I'm not going to do the same thing as yesterday. I do apologize about that for the people who had their eardrums hurt. But hey, man, it's fun. Someone has to have fun during this. Headphones are invented, says Elsa. Santa rally is just a bunch of bullshit, right? There's no absolute reason why, just because it's a certain month, that things must pump or dump. There's absolutely fucking no reason at all, at least in my opinion. I think that this is evidence enough, and we've seen dumps in December before as well. We saw it way back on in 2018, actually, way back on over here, November, December. Bitcoin was putting in its lows from 6,000 to 3,000 in that part of the market cycle, and then no, this one actually was a bit of a pump, but did lead into an overall dump later on. Anyways, I think that's about as long as I want to make this video right here. Just a little bit of hopium, perhaps. And again, invalidated and very, very nasty below the $43,000 level, especially on a weekly closure. Basically anywhere below the weekly 55, especially on an opening closure, that would look absolutely awful for the macro. Monthly, yeah, fair enough. Don't really have too much to add on to this one that already has been said on the weekly. Could say that we get a wick down a little bit below $40,000. Just don't want to see a closure really below about 43. That's kind of what it all comes down to right here. Anyways, oh yes, there's one last thing that I forgot to mention. So on this chart over here, we did also identify on the monthly specifically that coming into this month of December, and also November before as well, we saw the slope of the accumulation distribution indicator remain with the downwards posturing here. And not only did it have a downwards posturing, which is basically the only thing that matters for this one, the slope of it. If it's up, it's generally bullish. When it's down, it's generally bearish, and has gotten most of the pivots in this market incredibly well. I mean, you can just kind of line them up right here, calling the high right there, calling the low right there, calling the high right there, and literally right before the flu dump, and then calling the low right after it as well. And then, of course, the 2014 lows, and of course the 2013 highs. Okay, you can backtest this one yourself if you so desire. But anyways, we saw the slope remain negative and increase its curvature to the downside. It's almost just straight down right there. So that was implying that the last couple months here were distribution, and again, distribution within the context of this as a long-term formation is still, we still do have higher lows. So I do look at this as playing within that sort of narrative. I actually would not turn macro bearish just yet. Personally speaking, again, we've been speaking about this move very likely to happen. What I got wrong about this move, again, to be deliberately clear, was I was looking for a bounce at about 54,000 bucks. I mean, we did get a bounce, to be fair, for 3,000, 4,000 bucks, but well, fair enough, man. I guess the market's just not going to test the shorts here. That's trading, man. Weird shit does happen. So with all of that in mind, I think this is a good place to leave off this video. Be aware of where the macro picture does change, because you're going to see a lot of, you're going to see a lot of hopium and doomium in these next few weeks here, and understand that as long as Bitcoin's above 43,000 bucks and below about, especially 60,000 bucks now, nothing, it's just a macro consolidation as far as I'm concerned. And again, that's evidenced by the decline in volume from left to right. We see that during consolidations, and volatility also trending down here as well. Actually, even on the monthly, we see it contracting significantly to similar levels that we saw before the August breakout of 2020, where Bitcoin went, it's actually the lowest that it's ever been. Let's see over here. Okay, no, I'm wrong about that. It's been a little bit lower before, but comparable to what we've seen in the past. And most of these low reads have actually been met with making macro lows on price action. In fact, now that I realize it, yeah, right here, back in February 2015, very low. Back on over here, this is your December 2018 lows. This is your June lows right here before lifting off from basically 9,000 to 69,000, not bad. And then of course we're kind of getting into these same territories again. So I want to reiterate my stance. I'm looking for Bitcoin to, if Bitcoin is going to be bullish, it's going to take some time. It's not going to be resolved today or tomorrow, or probably even this month. But over the next, if you see Bitcoin essentially hold above 43,000 bucks, on a weekly and monthly closing basis over the next month and a half here, that's going to start to look really, really good for the macro, and does play into the long-term narrative that we've been putting out here, that Bitcoin cycle likely does extend quite a fair bit. Meaning that I think from my analysis before, it was like at earliest we see it top out in middle of 2022, if that does hold to fruition, and at latest maybe even Q4 of 2022. So of course, if invalidation is hit again, if invalidation is hit, I guess next area that I'm looking towards is back down to your low $30,000 lows, and then we come back to it after that. But for right now, I think that's going to do it. I want to wish you well. I want to wish you the best, and take care.